Hello, traders. It's Monday, August 1st. We're about 2 hours into trading. Let's take a look at my last picks. I actually had a bullish and a bearish pick. Reason for that was we had some really important news pending. We had the FOMC statement. We had mega cap earnings that were on deck. Now we know how those have played out. Market looks really, really good. But we didn't know that a week ago when I recorded the video. WWE was my long pick, and I loved this long green candle and this breakout through horizontal resistance, now support. You can see how that support was confirmed, and the stock is starting to take off again. Downward sloping trend line, breach to the upside. That is your bullish flag formation. Decent volume, relative strength. It has all the characteristics we want. Unfortunately, when the market took off, the stock still needed to digest these gains right here. So we had a couple of days of weakness that we had to wade through before the stock finally got its footing again. I'm expecting it to continue to move higher. LCID. That was my bearish pick that I gave you. If the market had a negative reaction, I think this stock would have traded much lower. You can see, let's overlay the SPY so you can see. Look at that market rally. Boom, 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 boom. Beautiful. What did the stock do? Nada. Nothing. Can't get off the deck. That tells me this stock has a lot of relative weakness. Upward sloping trend line, breach to the downside, below the 100-day moving average, relative weakness. Yeah, this was a decent short. Unfortunately, we really needed to have picks on the long side of the market. So I'm sorry I couldn't get something better out to you. I'm going to show you some stocks that I think that are going to perform well. So let's get to the market right now and we'll take a look at what's going on. Let's start with the daily chart. We've got this downward sloping trend line that I've referenced a number of times, and you can see how it was breached to the upside. Let's draw it in. You can see right where that came into play. It was around the SPY 400 level, and we broke out right in there with nice follow through. We also had a nice breakout above the 50-day moving average earlier last week and above the 100-day moving average. There's the 50-day moving average. We just blew through that, came back, tested it, all good, and then we moved through that downward sloping trend line. When asset managers and traders saw this formation, they came in and they embraced the market, especially when the reaction to the FOMC statement was good, especially when Amazon, Apple, Google, Microsoft all had positive earnings reactions. I think Meta was the only one of the big five that didn't have a good earnings reaction. Tesla, also another one we can add to the mix. Excellent earnings reaction. So the market is in go-go mode right now, and what this tells me is that in here, we still didn't have enough information. We had all this pending news right in here last week. We're right around the 50-day moving average. That was horizontal support. This has all been light volume garbage, in my opinion. Yes, we formed support. Yes, we had a higher low double bottom. So things were looking pretty good. We had a little bit of a clue here on those hot CPI, PPI inflation numbers that the market was able to reverse those gaps lower. So this is a little bit of a clue that there was a bid in here, but again, low volume. So until we had that news from last week and until we could see the reaction, now we know that the market wants to head higher. How does this help us? Are we out of the woods? Can we expect to continue to go higher from here? Probably not, at least not in my opinion. I am short term very bullish. I'll continue to be until the market shows me that I need to temper my bullishness. Still keeping my trades predominantly on the day trading side. However, there is room for some swing trading now. And what I want to see happen is I want this horizontal support around the 392 level maintained. I believe that this low is going to be preserved because of this price action here. Now that we've broken out, there's no more fear that, boom, we're going to have the next leg lower and take out that low. Now we've actually got some escape velocity from this low of the year, higher low double bottom, some really nice things starting to shape up. So August and September are typically very weak months. You've got the Fed raising rates. When they come back in September, the expectation is for a 50 basis point rate hike. They've got two more meetings the rest of the year, 25 basis points at each one of those meetings expected. So interest rates are going to go up by another full percentage point this year. We've already had a lot of rate hikes this year. We have not felt the effects of those rate hikes yet. So I believe that asset managers are still going to be relatively passive. Are they putting some positions on here? You bet. This is the type of confirmation that they want to see. That's why I believe the bid is going to remain fairly strong. But when you get into August, now you've had all the earnings announcements, all that news is out, some of the air gets let out of the balloon, and the market does not like to sit when there's nobody at the helm because the Fed is in recess for 6 weeks. All the politicians are going to flee Washington, and nothing is going to be going on in August. You also have families taking their vacation, and I know this sounds kind of strange, but traders have families too. They take the remaining time off in August now that all this news is cycled through. We still got a lot of economic news this week. We had ISM manufacturing this morning, came in better than expected at 52.8. Awesome. Wednesday, we have ISM services, very important number, should be good. Friday, the jobs number. I think the jobs number Friday is going to be pretty decent. I've been watching weekly initial jobless claims and they have been ticking higher, but not at an accelerated rate, certainly not at an alarming rate. So I think Friday's jobs number is going to be pretty good. And that's all super important because the focus is going to turn to economic releases because asset managers are going to be gauging the interest rate hikes that we've had so far and they're going to be determining if they're having a negative impact on economic growth. And if jobs are still intact, it's going to be good for the market. Good news is going to be good news. So that's kind of how I see things playing out in here as you start getting into the second, third, fourth week of August. Yes, we could see probably some profit taking in here with another higher low and extending this trend line out. So this environment to me sets up extremely well for one of my favorite swing trading strategies. So if you're a swing trader with a 3 or 4 week time horizon and you can't watch the market all day long and you need something that is very low maintenance, you're going to love this strategy. We are going to be selling out of the money bullish put spreads on strong stocks. So that's what I'm going to show you today. I'm going to show you some stocks that set up well for it, and we'll go in and we'll run a custom search. So let me bring that up and we'll take a look at what's on that custom search, the different criteria that I have. I am looking for a stock that has a bullish trade signal on a daily basis, is strong relative to the S&P 500 on a daily basis, has a new algo line breakout, which should fuel a move higher, gives us an added level of protection, and I want to see a stock that's above the prior day's high. Today, the market is above the previous day's high. Got to go back and take a look at what the market did because I want to show you some day trading patterns also. I want good option liquidity, and I'd like to see some decent volume today. These are going to be the stocks that I'm going to be looking at when I return to the stock section of the video. Let's take a look at what the price action this morning told us. So we know that going into Friday, we've got lots of buyers coming in. Look at these stacked green candles with little to no overlap. This morning, we had a big gap down, and I wrote in my pre-open market comments, which you can find on Twitter, it's in the description area of this video. This morning I said, listen, folks, I don't think we're going to see a very prolonged pullback today. There's still buyers out there. If you see stacked green candles consecutively on the open, that's going to be a sign that we're going to move higher. And you can see on the 5-minute chart how we had one candle here. Okay, this is already a bullish hammer because you can see the long tail under body and then a long green candle. This is when I posted in the chat room, folks. Like we're going to fill the gap in. Boom, boom, boom. Instantly filled the gap in. So, yes, this was a really strong, powerful move. We should have been expecting this. Those buyers from last week, they didn't just throw in the towel and disappear. They're still out there. You give them a nice big down gap like that, they're going to come in and they're going to buy. This red candle was a bit of a warning sign. I wasn't expecting anything quite that long, and it is a bearish engulfing candle, and it shows that there's some profit taking. I'd mentioned to members that we wanted to see this quickly resolve because we had follow through as well. So we instantly took out that red candle, and so we want to get into the halfway point of this red candle in the next 10 minutes or so. Didn't even have to wait that long. That told me that the rally is still underway. When you get strong moves like this, they tend to continue. The other reference point that we had was from last week. And you can see what happened on Friday. We get this opening move higher. This is really nice, strong price action. This is stronger because the candles are longer and they're stacked. It's more vertical. But this is really nice, consistent price action. And then we get this pretty big bid check, profit taking, trying to flush out some of these bullish speculators. So they bail on their positions. And then we have a little bit of a higher low in here. We've already got the higher low here. All right, this is looking pretty good. Then we march higher the rest of the day. We've seen similar today. The difference is now that we see off of this high, we're pulling back again pretty substantially. We didn't do that. There was much more of a benign move lower that kept right on going. So today we should be expecting a move higher, but these dips are going to be pretty big. So that we learned from the price action right out of the gate. So when you get these dips, you want to be taking your gains up here, let the market come in, wait for support. Okay, there's a long red candle. We have these green candles that take out the open. Okay, this is a place where you can re-enter. All right, we're starting to trace a little bit, take some gains off of your longs. We're trying to take this portion out of the move because this is where certainty lies. It's not on the fringes here. So you're going to have to be nimble. I'm expecting that we're going to have another move higher in here. We've got 1OP coming into bearish territory here where we should get a bullish cross out of a deep trough. That should set us up with a new high of the day. So I like the market. I love what I see today. I think everything's intact for it to move higher. Look for the price action to start to really wane next week and for the rest of the month for the reasons I already explained. So this is your last week to really have some decent price action and decent movement. Earnings are going to provide us with lots of action as well. So let's take a look at this list and let's see if we can find a good trade in here. I'm just going to knock through this list. We're going to take a look at some charts and we're going to go into that chart. I'm going to take off that SPY overlay. It'll clean the chart up a little bit. I love this chart. Downward sloping trend line. Breach to the upside. Above the 100-day moving average. Decent volume. Good relative strength. On a buy signal. Unfortunately, hover over the E, earnings tomorrow. So there's nothing there for us. We do not trade earnings. We do not hold over the number ever. That is a crapshoot. Why would I ever put myself into a 50-50 trade scenario when I know I can get above a 75% win rate, even as high as 90% win rate on the day trading patterns that we look for? It makes no sense. Why would I ever go into a 50-50 crapshoot? Save your money for something much better. Maybe AMD will set up a nice opportunity for us. AMZN. I love Amazon. This is going to be a stock. I put it in my pre-open market comments today. So this is the type of setup I'm looking for. Downward sloping trend line, breach to the upside. horizontal support also coming in around the 125 level. So here's how I like to structure my bullish put spreads. I like to sell them below major technical support. If I key off of the 125 strike price, so I'm selling the 125 put, I'm buying the 120 put, and I'm doing that for a $1 credit. I'm having to go out to August 29th expiration, and maybe it was the 26th, I can't recall, but in any event, it's the last weekend in August was the expiration cycle. Selling that for a $1 credit, I have to put up $4 for that spread. If I make one and I have to put up four, that is a 25% return in about 4 weeks' time. That is a really nice return. Now, I'm expecting Amazon to continue to move higher because I love this breakout. It's actually filled this gap right here, as you can see. I'm going to put the crosshair tool up. There's horizontal support right in there. It's already filled in the gap, so that looks good. If the market pulls back, and I suspect that we are going to see some speed bumps along the way in August, I've already mentioned that. This stock is far enough out of the money and it has enough support levels. Support, support. Here, let me draw that. Support, 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 support. Before I get down to that 125 strike price. And that's good because each of those support levels represents a resting point for the stock. So that if the market got hammered and the stock started to retrace with the market, I would be able to evaluate the stock at each one of those resting points. And a resting point means that maybe 2 or 3 days elapse with support at that level. Tick, tick, tick. That's the sound of time decay. I want to take advantage of accelerated time premium decay. Market conditions are going to slow down. Market's going to try and adjust some of the recent, try and digest some of the recent gains. So this strategy is going to take advantage of that. And you can see how Amazon is currently trading all the way up at $138.50. So this stock can move $13 lower and still be out of the money. Love this type of trade. Now, you're not going to be able to get that spread off before the open. I think it was bid somewhere around 90 cents, ask probably 110, something like that. So I don't know that anyone was able to get the spread off. Should have been pretty close today, but somewhere in here, we're going to get a little bit of a retracement. When we do, the stock will probably come in and you'll have an opportunity to get that trade done. Would I like Amazon on a day trading basis here? Well, it's had a nice, consistent grind higher. It's got okay relative strength. You can see the blue line is above zero. So yes, as long as I've got relative strength, I've got a decent market in here, I'd want to put an alert at the high of the day. I would like to be able to buy at that level. So I'm going to click alert. I'm going to click on the top of that candle right there. And now if the stock gets through that horizontal resistance point, makes a new high of the day, I've got an alert. I can decide if I want to take a position in it. So yes, I would definitely like Amazon for a day trade as well, but I wanted to primarily highlight it for that bullish put spread. So let's take a look at another stock, BLDR. Downward sloping trend line here, breach to the upside, takes out the 100-day moving average, spends some nice time compressing here. That looks pretty good. We have a horizontal resistance level right in here. Boom. Earnings before the open today, they like this stock. Yes, this could also set up for a nice bullish put spread. Again, you'd have to key off of this horizontal resistance level right in here. It's around the $69 level. So if you can get anything down at the 67.50 strike price, that would set up very nicely. Now we've seen choppy stocks like WWE that I highlighted in the last video. And on these big breakouts, see, choppy, 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 all over the place. So you should not expect stacked green candles. You're going to have some retracement. BLDR. D, R, probably going to have some retracement. You can see it's choppy. It's all over. So you're going to get an opportunity. You got to wait for the stock to come in a little bit. Then you're going to be watching that horizontal support level right now that comes into play right around the low of the day, which is around 69.46. If you get down to 69.46 or anywhere close to that, you're still preserving this candle. You're still preserving that horizontal support. That's when you want to be looking at selling a 67.50 put, maybe a $65 put, distance yourself from the action, get that credit. And you know that you've got decent support right in here because even before the earnings release, you had this nice support at the 100-day moving average. That's how I would play that one. But I like the breakout. I think that's a nice one. BLNK. You can see upward sloping trend line here. That's nice. Horizontal resistance broken to the upside. That's good. 100-day moving average coming in here. Pretty choppy stock in here. Lots of retracement, so not my favorite. And I'm just going to click through and see if anything else strikes my fancy here. Going through the chart, nice downward sloping trend line, breach to the upside, excellent earnings reaction. Some overlap in the candles here. You can see how the stock opened at its low from Friday, but it's been able to eclipse that. So it looks like everything is still intact for this stock to move higher. Take a look at that 5-minute chart. Pretty chunky, pretty choppy. In general, not bad price action, but I know we can find better. Let me find a really good stock for you on a day trading basis. I highlighted Ford this morning. That looked excellent. But I'm going to look to see if I've got something that sets up better. HTZ has been really strong. That daily chart's been excellent. There's your 5-minute chart. You can see the stock making a new high for the day. That's good. D1 chart. Go in and take a look at that. And I'm also going to just take a look at some of my regular old day trading charts as well to see what we might have working there. So we can go in and take a look at maybe heavy buying, see what we've got working there. As I look through the list, Boeing is one that looked pretty good today. Having a difficult time getting my daily charts to come up, and there you can see how Boeing is continuing to grind higher. There you've got a earnings before the open, breakout there. Very nice. Boeing looks like it's got a decent head of steam. If you're looking to sell out of the money bullish put spread, you would want to stay below that 100-day moving average at 155. So there you might want to sell a 152.50, 150 bullish put spread, try and get 50 cents for that trade. But yeah, I think Boeing is going to continue to grind higher today. So I like it. Tends to be a choppy stock. When you see price action like this with lots of retracements and you get a nice breakout up here, you do not buy here. You can expect this off of those highs. Wait for the support. Ah, there we go. Now we've come back halfway into that red candle. This is a good entry point. Should I buy up here? No, we're starting to compress. Got to wait for a little bit of a pullback. Okay, there's my pullback up. There's a bullish engulfing candle right after that red candle. Yeah, okay, we could get in here. You've got to wait for these retracements when a stock is choppy like that. You do not want to buy the high of the day because on those breakouts, you're going to have retracement. Wait for the pullback. Be patient. So let's continue to see if we've got anything else. I'm going to go right into red hot, see if we got anything there. Bull runs, another favorite search. Maybe we've got something. This is nice, strong price action. NKLA, that's another EV car manufacturer. SENS. I'm sorry I'm having a difficult time getting these charts to load right now, but I think I'm going to conclude the video. Sometimes my recording software interferes with being able to pull in the data. Everything kind of slows down. But in any event, I really like Amazon. That's going to set up for a fantastic bullish put spread. Yes, I do actually like it on a day trading basis as well. That is going to be your stock pick of the day. When I do my next video, I'm quite confident that Amazon is going to be trading higher than it is right now. Thanks so much. Good luck with your trading.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.